This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And I told you the climb back starts now. I'm telling you guys, there's only so much low that you can go. And once you hit rock bottom, well, guess what? The only way you can go from there is up. I've had a lot of shit happen recently. I had my girlfriend of 6 years break up with me on the 3rd here. I passed the evaluation, passed my first evaluation ever, got onto the express funded account, trading with Top Step here. And since then, I've just been in a shit ton of drawdown. $1,200 in drawdown right now. It was $1,600 in drawdown, almost $1,700 in drawdown. I've basically cut the equity curve in half from an equity high of 3K all the way down to 1,300. But here we are, slowly climbing back. That is what is extremely important. That I do it slowly and I take it step by step and I don't try to rush my way out of the drawdown in one move. I'm not trying to erase $1,200 of drawdown in one single trade. This is the lesson that I've learned about myself, and hopefully you can apply this as well, is that when I am in drawdown, it literally affects the way that I think when I am trading. Now, when I'm in a profitable trade, when I'm in a winning trade, now I'm thinking about how much drawdown I'm in and how this trade, this winning trade in open profit, not realized yet, could potentially erase all that drawdown. And what does that lead me to do? That leads me to not take off at my take profit objectives. That makes me be greedy. I'm not content, and I'm asking more from the market. And if you've been trading for a while, you know what happens when you get greedy, when you're not content, and you ask more of the market. Well, it tends to come back on you, and you lose everything that you once had, but was never really yours because you never realized it. So what I'm working on right now is making these gains mine and realizing them, but also focusing on the days that I want to trade, the high probability days that I would need to trade. Yesterday, came to the market and I knew this was not a good trading day. This is not ideal for my model. So I did nothing. Perfect. Because in the past, when the day sets up like it did yesterday, that is 100% a day where I would go in there and try to sell the market. I would have lost my ass. But I'm realizing my problems. I'm realizing where I'm going wrong, and I'm working to fix them. And I'm realizing that there is nothing that needs to change on my end. I have a system that works. I have a model that works, because if it didn't work, then I wouldn't be able to pass an evaluation count. Taking it slow, going step by step, only trading 3 contracts. I'm not in here gambling, trying to pass the evaluation in 2 trading days, am I? No. I'm following that process that I've created over months now. I'm following the edge that I have, and it produces results. So, with all that out of the way, let's get into today. What I was looking for, now it's still the morning. It's only 9:15 a.m. here, which is, 11 o'clock Eastern Standard Time. I'm on Mountain Time now. I also moved to a new state, forgot to mention that. But I'm in New Mexico now. I'm from Houston, Texas. But it's 11 o'clock Eastern Standard Time, so the day's not done playing out. But all I need is the real swing, the real move of the New York morning session. That's what I'm trying to do. So the fact that I've been put in so much drawdown recently has forced me to go back to square one, stage one, and remind myself, what am I trying to do? What is my edge? What is my approach to the market? And I've done these things. I've rewatched the video that I've told you guys to watch many times over. That would only benefit you if you studied it at least 5 times over and applied all the processes that he tells you to do in the video. That's how I came up with this. I didn't come up with it, but these are my notes from that video, right? All the different stages of trader development. So I've moved back to stage 1, okay? I put myself mentally back in stage 1, which is what he tells you to do when your trading breaks. My trading broke. So I've moved back to stage 1, and I'm reminding myself, what am I trying to do? Well, we take a look at that. How do I want to trade? I'm just trying to catch the real swing of the New York morning session consistently in the first hour of trading. That's it. That's it. That's all I'm trying to do, and that's what I did today perfectly. So being in this position of drawdown has forced me to just do that and just focus on just doing that, you know? So my overall bias for this week is bullish. So how is that going to play out? Are we going to rebalance the previous day range and trade higher, or are we going to overlap previous day range, rebalance the new week opening gap, and build a low of week tomorrow, Wednesday? So what do I mean by that? Well, if we go to the weekly time frame, I'm bullish overall because of how this down candle closed. We're touching this down candle here. We still respect this gap. We have not inversed that. We close with a really large lower wick. So if you drop down to the daily, we see more details. Friday dropped down, took an old daily low, but look where it closed. It still closed above Thursday's low, left this huge discount wick, and then Monday we saw a continuation of the impulse swing started on Friday. So on Monday, we just had a continuation of the move that originated after a run below this old daily low. We have not seen a discount of this new impulse swing that's created. If we drop to the 4-hour now, got my wire on my keyboard. Get this out of the way. All right, that's cool. So now if we drop to the 4-hour, again, the run below the old daily low, we create this new impulse swing, and we have not seen a discount of that range. So if you frame this dealing range, high to low, and we look at the midpoint, it's resting right here. That's also the new week opening gap that price just absolutely ran away from on Monday. It just completely disregarded it, turned away from it, right? So what I'm thinking is going to happen for this weekly range is Monday, up day, continuation of this impulse swing. Tuesday, drops down, takes Monday's low, rebalances the new week opening gap that Monday left, rebalances the impulse swing that started last Friday, and then Wednesday we'll probably build a low of week, and then we'll start trading higher. Now I could be wrong about that, but I don't have to be right about it, because that narrative, that bias in and of itself allowed me to catch the real move of the morning session that we see today. I was not bullish going into today at all. We have this discount gap opening of 129 handles. So when we have a larger gap opening and I'm bearish, I want to see the market reject a quarter of that range. Now, I'll read my annotations here, because this basically describes what I'm looking for. So this is what I basically read. New premium arrays created after a run on PDH. So we took previous day high in the Asia session, and then we created this new hourly sell side imbalance, buy side inefficiency. Respect to that, the candle closes below it. Another down candle comes in. This makes a bearish order block, high probability bearish order block, because it's proving respect of the hourly SIBI. Market rejects that as well. And now we're sitting down here. We're kind of consolidating it down here, sitting on this low. I'm not thinking this gap is going to hold up and support price, because I believe that if it was going to, it should have already showed a reaction. If we look beyond that gap, we can see that we have relative equal lows and also the new week opening gap inefficient. So you have to think, is this gap going to be strong enough to support price and hold the market up and prevent the market from drawing to the new week opening gap, which is definitely the stronger pull on price? So looking below that, you have a stronger pull on price that I think this gap is not going to prevent the market from reaching down into, if that makes sense. So on the 15-minute, again, sitting down here in consolidation, we're opening off the smooth sell side, which is bearish. This is very low resistance, but I'm not looking for a run on this low resistance buy side. I'm looking for it once we have made a low of week. So if we look what's going on right now, and this could very well be a low, and the market could turn here and go higher and make a higher high. I don't know what's going to happen for sure. I just have, a degree of probability, something that is favorable, that we should be bearish in the morning session, and that's all I need. Again, I'm just trying to catch the real swing in the morning session. That's it. So if we read my trade plan, my overall bias is bullish. How I think it'll do it will be Wednesday low of week, because of how Monday just left the new week opening gap, creating an extension of the impulse swing. Starting from Friday, price has yet to see a discount of that. What I'm looking for is a run below Monday low to the new week opening gap to set up Wednesday low of week. We've already cleared previous day high in Asian. That's produced bearish order flow. That's respected on the hourly. Now price sits in the lower day, at the lower day in consolidation. That's a sign of weakness. I don't think the hourly gap is going to hold up. It should have produced a reaction already. So I'm looking for price to stay heavy at 930, clearing the pre-market low, and that's going to tell me to be a seller. So if we go look at the 15-minute, see if price fails to do a 1/4 closure of the opening range gap, and it does. This is what confirmed the trade idea for me. If you go to a 5-minute, frame pre-market buy side, here's 7 o'clock, start of the pre-market session in the New York morning session. 7 o'clock starts that, right? There's your high, there's your low. What does the market do? What does the market do first? Takes buy side first, then goes for sell side. That's bearish. Okay, if I'm bearish, I want to see the market run up above old highs first. Look where the body close. This is a quarter of the opening range gap, and where does the body close? It closes below it. So that's bearish. Simply put, that's bearish. So the opening range, initially I'm watching this. This does not look good to me at all. I still like how it's sitting down low here in this consolidation, and it's kind of struggling to come up off these lows. That's also a sign of weakness. I think I noted that intraday. So far, not bearish and high resistance, so I'm in risk off. It's having a hard time trading up. That could not be the real move, and I still like how we're sitting at the low a day. So again, what I just said, I liked how price was sitting at the low a day, not coming up off of it. That tells me where we're still sitting in this consolidation range. We're not leaving it. We're also not leaving it lower. So now I'm just waiting for confirmation for the market to tell me to sell this thing. And it does right here. On a drive up above the pre-market buy side, what we see is the market suddenly snaps back inside the range. And you can see that even on the 1 minute, we're still closing below a quarter of the opening range gap. So that's still a sign of weakness. That's still bearish. So go to the session recording now. And the trade was executed at, I have so many tabs open, 9:38. So we'll go to 9:38 on here. 9:38, boom, okay? So I did not even think to put risk on. I saw exactly what I needed to see in alignment with my plan, and I put risk on. That's the power of it. When you come into the market only looking to trade in one direction, you have a solid edge, you have enough experience to know what the market's likely to reach for in the New York morning session, because, again, that's all I need. Then you just wait for it to play out. And when you see something that's in alignment with that, boom, you don't even think to act on it. You just go. Just put risk on. Just put risk on. So I'm watching how this candle's painting, and notice how suddenly it just suddenly drops lower, and it gets really, really aggressive like that. Boom, right there. I see that, and I'm like, okay, yep, that's a valid bearish order block. So I'm seeing this behavior in price action after we took the pre-market buy side, and I'm not even thinking to put risk on. Boom, right there. That candle closes as a large down close candle with displacement. We saw the displacement
Order filled.
time. So my stop loss is going to go with the swing high to give this thing plenty of room to work. So one thing about lowering my leverage down and only trading one contract as I slowly work my way out of this, again, step by step, right? We're not trying to erase drawdown in one single trade, because when I've done that in the past, that's influenced me to be greedy, hold longer than I need to, not be content with what the market has given me, always asking for more, and the trades just come back on me, and I end up leaving with nothing, or I end up letting that winning trade turn into a losing trade. So it's ironic, because by trying to eliminate the drawdown as fast as possible, I actually end up adding on to it, adding on to more drawdown. That's just a lesson that I've learned, making that mistake multiple times over. So I've dialed the leverage back, right? I'm on the verge of blowing this account where I was. Now I'm more off of it. Now I have like $600-700 a buffer before I do blow it, which I still don't think I am. I'm going to keep trading one contract. But trading one contract, I'm able to give the trade a lot more room to work, and I've learned my risk tolerance. So that's another thing. You have to understand your emotional aspect and your emotional triggers. I know that from trading the evaluation and now the express funded account, if I'm risking $200 or more on this account in particular, that makes me feel it. I feel it for sure, and that's when emotions start to begin to hijack my process. So there's a threshold of risk amount in dollars where you can't tolerate it, where trading with that risk amount or risking that much money makes you feel a certain way. It's an emotional trigger, and then you start disregarding your process. You become blind to your process because now you're worried about the dollar amount, and that's led to so many premature stop outs in the past, because I'm risking over $200. I don't want to lose over $200 on the evaluation. I want to pass the evaluation, right? I don't want to lose. I don't want to be wrong. I don't want to blow the evaluation or the express funded account. So I try to make the risk on the trade as minimal as possible. Now my stop loss is not framed at a point that actually invalidates the trade. It's framed at a point where I'm comfortable with losing that risk amount, and then I get stopped out early, and then the trade moves in my favor. So that's just an example of how emotions and your emotional risk tolerance in terms of dollar amount can hijack your process. In this case, just trading with one contract, I'm fine with it. Now, the condition today was really, really shit. It was not good at all. You can see where I'm putting my target. I put my target, see if we can find it. So initially, I moved my target here, right? The AM low from yesterday. That's all I'm looking for. I don't even know if we actually ended up delivering that. I don't even know if we will. But I don't need that to make money. Again, maybe we will. This pump up. Now we have a sharp rejection. We'll see what happens, right? It's still the morning session. If I held this probably for the duration of the day, this is probably going to be a down close candle. We probably will take PDL, like I mentioned in the plan. But initially my target is here. And even then, you can see in the recording where I'm moving my target, right? So I'm starting to get greedy. I'm starting to think about, okay, this is probably a good trade that's going to move in my favor. And where did I end up moving my target? All the way down here at 23. You saw it, right? 25,320. How far away is that? Well, that's the new week opening gap. That's the level that I'm looking for in my plan. Do I know with certainty that it's going to get there? I'm confident it's going to get there. It's never 100% that it's going to. And I'm trying to work my way out of drawdown right now. So there's no reason for me to be going for these large ass swings trading one contract, right? Once I get back to my normal risk amounts, once I get back to trading 3 contracts, well, that's when I can take one contract off and then hold the other 2 to run and just set and forget about it. Just let it play out. But in this case, I'm in the fucking hole. I don't have the room to do that right now. So I'm just trading one contract, focus on getting in, getting out, and just looking for a small move, 70 handles, 60, 70, 80 handles, under 100 handles. If it gives me 100 handles, cool. But in this case, I ended up taking off here. The market makes this low here. Now, why? I'm not going to lie. This was kind of an impulsive exit. But look how many drives we had below a previous low, right? We formed this low here. Well, we formed an initial sell side here. We took that. We formed this low here. Then we took that as well. We formed this low here. Then we took that as well. Now we have 1, 2, 3, 4 consecutive drives below an old low. I'm trading one contract. So the thought of the market just completely reversing, coming back on me, and me giving back everything that I had in open profit just because I could not take off, because I was greedy, because I'm in drawdown, because I'm looking for more, that feeling fucking sucks. And that has happened to me so many times in the past where I'm trading one contract, right? I'm trying to go for a large swing, but the market comes back on me, stops me out for break even. And I never took anything out of the trade. No equity secured because I'm just trading one contract. I don't have the ability to partial. So when you're trading with one contract, you got to be more surgical, more in and out, and just be content. Just be okay with what the market has given you. And that's what I'm working on right now. And I'm combating all the greed that I do face. I know that if I can do this consistently, that's it. But while I'm in drawdown, I need to take things slow. I need to dial it back a bit. I need to not be so insane with the trade that I'm taking. I could have held this 100%. 100% I could have swung this for the AM low here or for new week opening gap because I'm confident it's going to deliver that. Again, it's not 100%, but I'm pretty certain that it's going to deliver that, as I stated in the pre-market plan, right? Let's look at my objective. My objective is literally the new week opening gap in PDL, and at this point in time, I think we're probably going to reach down into that. Here. Monday ran away from it. Tuesday comes back. It's going to overlap this. We'll build the low of week somewhere in here once we've rebalanced this. Trade to a deep discount on the daily chart. And then look what we've left behind as well, right? Look what the market has left behind turning away from this. We have these equal highs. All this is extremely smooth. I think the potential to come back and overlap everything that we did today is also there tomorrow. So we'll see. We'll see. But aside from that, I think today taught me a lot about, the greed that I feel when I'm in drawdown, what I've been talking about. I sold early, but I can feel the greed within me. It's not good to look at what I could have had in winning trades had I held longer. This is nothing but build the bad habit of holding for too long. I'm also training myself to try and erase the drawdown at once rather than piece by piece. And I know how that goes. It's everything that I just explained to you guys. And then again, I curbed my tendency to look for the low resistance liquidity run. Now previously, I've had a solid read on the market recently, yesterday and today. But in both instances, it curbed my tendency to just look at market criteria and look how we have these highs set up here and then think that's low resistance liquidity and we're going to have a low resistance liquidity run. Because if I did not consider what's going on in the daily time frame, if I did not consider how this weekly range is likely to paint, if I did not consider what yesterday left behind, what yesterday left in its wake, then I'm definitely going in today with a bullish bias because we have all these smooth highs. We have relative equal highs in the Asia session. Low resistance buy side liquidity. We're opening low on the day. We have a discount gap opening. Previously, I would look for the market to open, drop down, take the low day, and then trade up and aim for these. But because I'm considering the other elements that go into bias and not just looking at market criteria, by market criteria, I mean what do we do in the overnight session and what do we do in the pre-market session? That's it. And where are we opening on the day? And do we have a gap opening? That's what I mean by market criteria. But what I consider other elements, when I consider the daily time frame, the weekly range, the economic calendar, I put all these things into play, the near-term condition, what we've done in the previous 3 trading days, put all those pieces together, then I know that I should not be bullish today. And that's what I did yesterday, and I was not bearish yesterday. Previously, like I said, I would see relative equal lows and think to target that shit. See relative equal lows here, think to target that. Or I'd see relative equal highs, and just look at that and then instantly fall in love with that idea. So the biggest lesson from today, I curb my tendency to look for low resistance liquidity run because I'm considering other elements aside from market criteria. This is the huge takeaway right here. If anything, market criteria should confirm the other elements to be true, not the other way around, meaning market criteria should support the higher time frame narrative, not higher time frame narrative should support market criteria. Because when I go into the days and I just see relative equal highs in the Asia session and I think, oh, that's the draw on liquidity, we're going there. Those are the days where I look at market criteria, which again is just what we did in the overnight pre-market session and where we open on the day, and immediately marry an idea and immediately get stuck to a bias. In this case would be a bullish bias. And then I would go up to the daily chart and then look at all the things that support that idea that I've created from just looking at market criteria. So it goes market criteria supports higher time frame narrative, not higher time frame narrative supports market criteria. You have to put the context behind it, what's going on recently, what's happened in previous days, then see, okay, what have we done in the overnight and pre-market session? Then you have a solid bias. And that's what I've done yesterday and today, and it's been working. So I'm not just looking at market criteria and falling in love with ideas. That is what's killed me recently, and that's what led to this crazy sell bias. If you go to the trade log, look how many of my trades recently have been shorts and how much drawdown that put me in. Short. I mean, I'm all selling the market. And that's all because of what I just explained to you right here. I look at equal lows below and think, oh, that's the draw, we're going there. Would not consider other elements, higher time frame, narrative. So that is the biggest lesson from today, 100%. But there you go. We've got 2 green days in a row, 1 trade, 1 shot, 1 pull the trigger, that's it. In and out. Being content with what the market's giving me, slowly working my way out of the drawdown. I think when I get back to $1,000 and the DMLL, daily max loss limit, then that's where I'll work my way up back to 2 contracts, and then I'll be able to hold some partials and make some more from these winning trades. But at the same time, that also means if I do lose a trade, it's going to put me in more drawdown faster. So I have to get to a position where I'm comfortable to size back up to 2 trades. I'm not just going to do it right now and just do it randomly. It has to be methodical and thought out and planned, right? There has to be some sort of strategy behind it. Not just going to go back in there and start taking 2 contracts. No, I'm going to slowly dig my way out of this hole, and we'll work our way back up. So my goal for this month is just to eliminate the $1,200 in drawdown. If I could do that, this is a great trading month. And we also have Thanksgiving here, so probably won't do I absolutely will not do anything this week. So I have the rest of this week and the next, and then we'll go from there. And then damn, 2025 is almost over. It's crazy shit. Time is flying, but I'm not wasting a single day. Although I have been, because I got broken up with, and then I just was fucking sad and immobilized, but I'm recovering and I'm healing and I'm feeling better and I'm becoming myself again, and I'm in a new state, and I have a job that's taking the pressure off of trading. I don't have to make money trading. No pressure here, and we'll see how this goes. So it's looking good, boys. It's looking good. I know there's some of you guys that actually support me, and I know there's a lot of you guys that actually hate me and want to see me lose, which doesn't make sense. Why would you want to see somebody else lose? Don't support that motherfucker. Give that motherfucker some love. Tell him, bro, you do you, and I wish you the best. That's it. So, talk to you guys tomorrow.